This is the Savvy Investor Podcast. Welcome, Savvy Investors, to another episode of the Savvy Investor Podcast. I'm your host, Mike Ponte, and also founder of Savvy Investor. And today's discussion is one that is going to be obviously an important one because it's all about financing and, more importantly, creative financing. The current financial climate is always kind of an interesting one. For us as investors, we are always looking for money, no matter what. If it's a single family home or multifamily property, money is an important piece to get that next investment project. As the saying goes, no money, no honey. I'm just joking, obviously, not really. But banks aren't always the most flexible of creatures when it comes to giving you some of the financing that you want. Or maybe it's just me. Maybe they don't want to give me any of the financing, but it can be challenging. The rules are always changing. The goalposts are always moving. And so there's this constant change that's always happening. And for a lot of us, it can cause a lot of headaches for our investment strategy. Let's just highlight some of the things that have happened with CMHC last year, where you now need to hold the property, your multifamily property, for 2 years before you can actually get CMHC financing. That caught a lot of people completely off guard, and it's always really challenging. So for us real estate investors, it's always really important to look at creative financing strategies. And it's discussed a lot in our community, like seller financing, vendor takebacks, joint venture capital, private lending, and so on and so on and so on. And it's important for us real estate investors to be very open-minded to looking at some very unique alternative investing strategies, so you have more tools in your tool belt to find the right the right financing strategy to fit your investment strategy. And that's what today's episode is all about today. It's all about creative financing strategy. So we're very, very excited to have our friends from Control and Compound, Darren Mitchell and Christina Wyatt, joining us to discuss exactly that. And it's specifically the infinite banking concept. And I'm sure many of you guys have been hearing about this or watched some of our podcasts or listened to them present in a previous setting. But we actually go in a lot deeper to really provide some insight of how we can use infinite banking as yet another financing strategy for our properties. Okay. And what infinite banking is all about is getting the ability to use your life insurance policy to potentially fund your next deal. Does that sound pretty interesting? I think it does. It's using your insurance policy now while you're alive. Okay. You're alive to help you with your financing. What a concept that is. So Darren Mitchell is an accomplished real estate investor and has successfully been investing in properties across Ontario and other provinces for a very, very long time. And Christina Wyatt's very similar in the space. Is a business owner, owns lots of real estate investment projects based in Nova Scotia. So for them, they're utilizing this tool as part of their investment strategy, and this is where the company was founded. In this episode, we actually discussed what infinite banking is. What is this concept that everybody's kind of talking about and we're seeing all over social media? Secondly, how do we integrate this concept in our real estate realities? How do we use our term life insurance to facilitate this, to buy our next investment property? What are some of the steps and processes we need to put into place so we can utilize this new creative financing tool? So again, for everybody that is looking for ways to raise capital, which should be all of us, this is a great episode about yet another creative financing strategy that we should all be adding to our tool belt. So it's a great episode. Make sure you listen to the very end. Lots of great things that were shared. Before we begin, I want to highlight this episode's sponsor. This episode is brought to you by our Savvy Investor trusted partner, Equiton. Equiton is a leading Canadian private equity firm that delivers notable returns of 8 to 20% for its investors. They make private real estate investing accessible and provide easy access to all types of investment-grade real estate through their proven, high-performing investment solutions. They offer true diversification, full transparency, and all the benefits of real estate investing without the difficulties of financing, tenant management, building maintenance, and project management. By investing with Equiton, you are partnering with real estate experts with over 100 plus years of experience who make investing simple. If you're looking for a reliable and consistent fund to invest in, then set up a discovery call to learn more about Equiton's private real estate investment solutions. To learn more about Equiton, please see the show notes to visit their website. Welcome to the Savvy Investor Podcast, guys. Today, I'm actually quite honored and privileged to have Mr. Darren Mitchell and Christina Wyatt, who are partners with a company called Control and Compound, to the show. Welcome, guys. A pleasure to have you guys. See you guys again. How are you guys all doing today?
Fantastic. Good to see you again.
Yeah, happy to be here, Michael. Excited to do the podcast.
Very much so. And just so everybody knows, this is kind of one of our early parts of our podcast. In fact, Darren and Christina are our first interviewees. And I couldn't think of anybody better, to be very honest with you. So thanks for being here, guys. Again, really appreciate it. So, you know what? You guys are extremely famous in the real estate investing community. You guys are doing events and podcasts and all of these wonderful things. Maybe just to kind of begin with, maybe you guys can just do a little bit of an introduction to yourselves, maybe a little bit about your real estate investing journey, and even more so, how did you kind of get into your business that you're in today?
Yeah. So I used to be a traditional financial advisor and did the regular mutual funds, all the regular stuff advisors do. And really, after 2008, when I saw what people went through not being in control of their money, that's when I really said, all right, I got to do things differently. And I started studying what wealthy people do. And we started literally just learning exactly what wealthy people do by traveling around North America and visiting with them and visiting with high end advisors that deal with the wealthy community, and totally changed the business model really to target real estate investors and business owners and help them grow their wealth like the wealthy. And then Christina joined as a partner, and now we've been doing this together for a long time now, and we work in every province and territory in the country, and we help business owners and real estate investors with the infinite banking concept. And Christina's a rock star.
Oh,
Well,
wow.
thanks, Darren.
Tooting
That
your
was
horn there,
very
Christina.
nice.
That's fantastic. Eh?
Well, I thought I took up too much time, so I had to throw
Yeah.
her something. I
I have a feeling he's going to be asking you for a favor or something a little bit later today.
Yeah, maybe. No, but what Darren said exactly. Same kind of thing for me. I've been in the business 13 years or so as a financial planner, working with Darren either directly or indirectly the entire time. So we've been doing this a long time, but switching gears to more that infinite banking side, working more so with real estate investors, business owners, mostly because that's what we are too, right? We're both business owners. We both invest in real estate as well. And we really preach it. You want to be working with people that are doing the same things that you're doing. So we're very like-minded, and we like to share what we're doing with others so that they can do it too.
Yeah, very good. And I think it's important for us real estate investors, because it's not normally talked about, and is for the real estate investing community, we get into this business to be buying real estate, but we become accidental entrepreneurs. And then they're just like, wait a
Mhm.
minute, I want a business. What is this? So when you hear the comments coming from Christina and Darren that business owners, and you're like, oh, I'm not a business, that's not true. You are all of you are business owners. And so I think it's important to kind of always learn some new different strategies and concepts, which is what we're talking about today. So and you brought this up, Darren, is about infinite banking. And again, some people have heard this and have heard about this strategy, and some people have not. So maybe you can explain what is this infinite banking thing, if you don't mind, and or I'll leave it to Christina or Darren or both. I'll let you guys rock paper scissors it and see which one wants to share a little bit about it. So
Darren's super good at the 60-second version. We got him really good. Like, he's been practicing that reel for a long time. So I say we do the 60-second version, Darren. You've got this.
That was 2 months ago. Do you know how many reels I've done since then? Okay. Yeah. So typically, the idea here is we want to be in control of our money, and we want to be in control of our money to take advantage of opportunities and deal with emergencies. So those opportunities tend to be business or real estate. So we take this specially designed high cash value life insurance policy. It's not like any other policy you've ever seen. It's less than 1/4 of 1% of the policy sold in Canada. And this
mhm.
one really focuses on the cash value. We want to grow that cash because the cash continues to grow for the rest of your life tax free. So we're going to compound that tax free for a tax free retirement. We can access this money tax free in retirement. But at the same time, we can multiply those dollars, provide a death benefit for the family to keep those properties in the family when you die, or actually, we can show you how to spend your own death benefit. And then we're going to multiply those dollars again. And the same time as they're growing for our tax free retirement, the same time as they're providing a death benefit, we can multiply those dollars legally like a bank and use those dollars to go do real estate deals, to do business deals, take advantage of stock market or Bitcoin when it goes on sale, whatever your thing is, right? The possibilities are infinite. So we
Right.
really take a dollar and we multiply it so it's in more than one place. And what I love about it is I know I'm saving for the long term for a tax-free retirement, but I also in the short term I use that money over and over again for real estate investments. So give you a quick example. I bought I was going to say my fourplex, but let's just use private lending. I like doing private lending. Last private lending deal I did, I had this beautiful cash value life insurance policy, and I said, why don't I leave that right where it is? And I actually borrowed 100,000 against that policy from the insurance company, no questions asked, didn't show up on a credit report, and then I loaned it to a developer at 15%. In a year, I got my 115 grand back, paid the insurance company 100 grand plus 5,000 of interest, and I pocketed the 10 grand. That's an and asset. My cash value continued to grow exactly the same, whether I had that loan or not. So multiply money, tax free retirement, use it for real estate, doesn't show up on credit reports. It's magic.
That's pretty cool stuff. Anything you want to add on that, Christina, or did Darren nail it for his 60 cents? I was actually timing him, to be honest with you.
Was it
He didn't do a good job. He went over after 60. So we'll have to
you
work
know,
on that a little bit, right? So
he did get a lot of the information in though, which is
he
great. So
did.
like at the at the end of the day, what you're looking at is just making what you're already doing better. So we're adding this strategy to what you're already doing with real estate investing. Instead of putting your money directly into the real estate investment, we flow it through this insurance policy first. And by flowing it through the policy, now we've got our dollar doing so many more jobs because it's uninterrupted compounding. We have the death benefit. We've got all these additional things that are happening just by adding one extra step to what you're already doing. Because what you're doing is great. We all know it's great. Real estate investing is awesome. How can we make it better? And by adding this one step, that's what you're doing.
Yeah, it's very good. And I think part of it is, in this game, it's always about looking at different strategies. And this isn't a new strategy, correct? Like this has been around for a long, long time, but for some reason it's been kind of hiding or it's just not been thought of. I'm not sure if it's more popular down in the States than it is in Canada, but maybe you can highlight this. How long has this been around for? And where did this idea come from, to be honest? So,
Yeah. So the type of insurance we use, again, we use four specific products out of about 10,000 different products in Canada. So
right.
it's not your regular insurance, and a lot of times people look at insurance as an expense, which it is. My home insurance, car insurance, term insurance, that's an expense. This is just a place to save money, so it's really a savings vehicle. But the oldest company we use has been around since 1846, so it's as old as Canada. The newest plan we use is 100 years old and a couple at 150. So literally the newest contract or policy we would use has a 100-year track record, the oldest going back to 1846. And all four of these products have paid a dividend tax-free each and every year going back to 1846 or 100 years. So they've never missed. It's been around for a long time. It's gained a lot of popularity in the last 10 or 15 years. Nelson Nash wrote a great book 20 years ago in the States called Becoming Your Own Banker. Then in Canada, I wrote my book, Be the Bank, Amazon bestseller that really kind of brought that concept to Canada. But what's happening is with social media, with books, we're able to get that message out because the banks can't sell this. The banks cannot sell this product, and the banks don't want you to be in control of your money. They want to be in control of your money, right? Take your RSPs when you're 20, keep it for 50 years, and then drip it back to you for the next 30 years. Well, that's 80 years of them controlling your money. We want to put the control back into the real estate investor's hands or the business owner's hands. So, been around a long time. Over $1 billion goes into this a year in Canada, into these high cash value policies. So, it's not new. It's been around a long time, and millions of people are using it.
Very good, very good. And the banks want to control our money. Hey, is that what they want to do? That I think so. Again, this is
Paycheck going in every 2 weeks, strip it back to you. Yeah, yeah.
yeah. Let me charge you the big fees, all that kind of stuff. This is awesome, guys. Really, really great. So let's take it down to the most simplest process. I guess looking at processes. So people are hearing this kind of maybe for the first time, and they're just like, okay, this sounds interesting. I get technically I get to be my own bank here. And that's kind of really what infinite banking is, and that's what it's doing. What are kind of the steps that people would take to kind of institute this as part of their strategy, and how would they look at this? say, for example, if they're looking at an investment deal, is this something that they should be looking at from a deal by deal perspective? Or, how, maybe share a little bit about what are the steps and how should investors look at this as part of their overall investment strategy when they're buying properties? So
Yeah, so I'll take that one. I really do think that the very first step is getting educated on the strategy. So just like your real estate investing, you're going to take the time, invest in a course, work in the Savvy Investor group. You're going to take the time to learn it. So you want to read the books. You want to meet with the wealth coach over at our office, do an education session. You want to learn about it. So when we look at this, it's the base of your financial plan. So you don't want to wait until there's an investment deal that happens. What you want to do is you want to start with it. So just like the foundation of your house needs to be rock solid, same thing goes with the base of your financial plan, right? We want it rock solid. And the only place you can do that is in cash, or we use cash value. So we build out that base. Then you take it and multiply it and you put it back into that real estate. You put it back into your business, the things that we talk about. So you want to get ahead of this. Like we always tell people, the best time to open one of these policies was yesterday, because you start that compounding immediately. So I wouldn't wait until that investment arises. You prepare for it to be, right? Like you're not just you're going to save for that money to be able to put the down payment. You're going to make that strategy. We'll include this in that, in that foundation of your financial planning, and then build on it from there. So the first step is absolutely reading a book, watching a webinar, listening to podcasts, our podcast, Control and Compound. So like listening to those things, then getting in touch with, someone that knows this and how to implement it. And then you get it put in place and you start saving into it. It's just like if you saved into your bank account, no different. You're going to start saving it. As you save it, you're going to build that foundation. Then you're going to turn around and put it right back into the real estate where you would have put it anyways. But now we've got it working a lot more efficiently overall.
very good. Great answer. Very, very good. Darren, like he's smiling. He's
Yeah.
liking that. So that's
I,
perfect. Good.
yeah, I loved it. So it's a base of your financial plan. I always say you have to save or store your money somewhere.
Of
And we
course.
think this is the most efficient way to do it. And when we educate people, they tend to agree and say, well, great. Yeah, I got to save money. Canadians have a problem saving money.
Yeah.
We've all got to save money. And this is the most efficient way to save it. Then you're prepared for step 2, which is investing in your real estate, your business, or yourself. Those are the ways you're going to make money.
Very, very good. So is that something you guys are managing? Is the policy itself? Do you guys actually take care of that as part of your guys' training? And maybe you can highlight what, they're going to set up a time with one of you two or some of your team. What's the exercise for people, and what do they need to prepare themselves for when they get into a discussion with them?
I'll take that one. You want me to take that one? All right. So, uh, okay. So our office is a fully servicing firm. I don't know if you're going to get that everywhere, but at our office, we have a full back office support that is going to help you with your policy and anything that you're doing. The steps are really getting in touch with us, having an education session. Like I said, learning is key. So the first thing we're going to do is we're going to teach you the strategy, because if you don't understand it, you can't utilize it. So we want you utilizing it. We're going to spend the time on the education point. Then we're going to implement it. So getting a life insurance policy in place. Unfortunately, there are a couple steps to it. It's life insurance, right? So we do need to get approvals. Now, not there's ways around it if maybe you might not be insurable and whatnot. We work with you on that. We get it set up for you. So your wealth coach is going to walk you through all of that. They're going to work with you. And then we have a whole back office that handles when you're taking policy loans, when you want to repay them, if you want to set up monthly payments, lump sums, you need any kind of changes made, our back office is there to support you on it. As well, your wealth coach is there to talk to you about different investments and projects that you're working on. So maybe you're thinking, I'm going into this project. Well, Christina, does it make sense to use the policy for this? Can we do a loan analysis, see how much I should be paying back each month if I want this paid off in 18 months or something like that? Like we can help you with all that, because that's what we do. So we're here to support, our clients in using the policies, and we're meeting with them regularly and encouraging them to listen to podcasts, because again, the more you utilize it, the better it is. So if we're helping with getting you, using that policy more, it's just multiplying your returns and making it overall better.
I love this. This is so very good. I love this. So it just gives you guys, just for those that are listening today, it just gives you yet another option. Again, we've built relationships with mortgage brokers and bankers and all this. Here's just another strategy, especially when you're challenged with trying to get some financing. And this is just yet another option that's actually available. So maybe to kind of put you guys on the spot a little bit, maybe share an example or just real life strat. I just bought myself a 20 unit apartment building. Okay. So I got it under contract. Okay. Yeehaw. We're very excited about that. I call, well, Darren's been really quiet, so I'm going to pick on Darren a little bit. So I call Darren and I say, Darren, I just bought this property. Now what? Tell me a little bit about that. And then what's the turnaround time for something to release those funds as well?
Cool. Great question. Okay, so I haven't taken your course yet, so let's use my 4 unit building instead of a 20 unit building. But I can give you a real world example. So I bought a fourplex a couple years ago, and people always say, "Well, it wasn't Ontario." I'm like, "Yeah, it was Ontario, but it wasn't Southern Ontario, so it was 375 grand." So I had to come up with 80 grand for a down payment. So I, was always like to brainwash my children. They were teenagers at the time, and I go, "Can I get money from the RRSP?" No, that's it. That money's in jail. And I'm like, "Okay, great. They've been listening. What about the RESP? No, I can't access that. So what about this cash value life insurance policy? Yes." So I said, well, I don't want to cash that out or take money out of that. I am going to leave that compounding tax free for the rest of my life. I'm going to use the insurance company's money. And I called up and I said, hey, can I get a loan? And they asked me 2 questions. They said, Darren, do you want the check deposited in your account or do you want a check? That was the only question. They didn't ask me if it was a good investment. They didn't ask me for financials. They didn't ask me when I was paying it back, how I was paying it back, or if I was paying it back. They just gave me the money because that's contractually required. Took that 80 grand. I went to the bank and I said, hey, I need a mortgage for 300 grand. And the bank said, where'd you get the down payment? I said, I borrowed from my cash value. They said, great. We don't consider that a loan for borrowing capacity. So they don't consider that a loan. Bought the fourplex. We did some improvements to increase the value. It was actually 2 duplexes on one piece of land. We separated them. Now that's valued at say 640. I go back, I refinance it. It was cash flow positive. I was paying down my loan. We're about to refinance it. Go back, pay off that loan, rinse and repeat. The whole time I did that, my cash value was not affected one nickel because I never cashed out my cash value. So that's still going to be there for me for retirement. I still have this massive increasing death benefit for retirement. And one of the things I love about a death benefit in retirement is all my income properties, I am going to refinance the crap out of those in retirement, take all that tax free money, die owing a bunch of money. Well, if I have millions of dollars of death benefit now, because I've had 30, 40, 50, 60, 70 years of compound interest, not just on my cash, but on my death benefit as well, I'm able to multiply my family's wealth by doing project after project without affecting my long term growth.
Amazing, amazing. I hope you guys just heard that. Like, at the end of the day, and it'll be very interesting to hear. It's just like, so the banks are looking at this. You can you can get a down payment using this method where it's not in your money technically. You're using a different facility, but then you still get financing. So you're technically almost looking at 100% financing in some of these projects. Does that sound correct?
Yeah,
Yep.
100%.
Absolutely. And I think on the loan side of things too, we call them loans, but they are not, and they are loans, but they're not your traditional loan whatsoever. Like there's a couple of unique characteristics to them. So these loans are not callable. They can't call them at any time. Whenever you're using them for your investment purposes in your real estate, just like other loans, the interest is tax deductible. But the best part is that they're unstructured. So you pay them back when you want, how you want, and if you want to, which is crazy, right? Like you create
Really?
the terms to these loans as well. You decide when you're going to pay them back.
Wow, that is so. Can you explain that to me again? So let's just again, we'll use Darren's example because I think, like I said, this is some aha moments for a lot of people. Like, I already sent Darren an email for a consultation, just so everybody knows. But it's just like, so we just loaned $80,000. The interesting part is there was not a lot of assessment on the deal in itself. They just said, "Where's the check and where's the money going to go to?" And they're cutting you $80,000. So before they do that, and in regards to a payment program, so you're telling me that it depends on, you can create your own structure and how you're paying this thing back. Is that correct?
Absolutely. You have access to 90% of the cash values at all time. It's written in the contract. They have to loan it to you. And all you have to do is click to sign form. Click to sign, the money goes into the bank account. So no questions asked on what you're using this money for. And they It can never be called. It's uncallable, right? And then you create the structure of how you want to repay it. So the first example that Darren gave was a private lend that he was going to get repaid in 1 year. Well, in that case, I'm not going to pay any principal or interest for the year. I'm just going to leave it there. And when I get my money back, I'll turn around, I'll repay the loan, and I'll pocket the difference, right? In the duplex or the fourplex situation, you might, this is a bit of a longer strategy. So you maybe say, you know what, I think I'm going to pay the interest for a couple years. And then when I do the refi, I'll turn around and I'll repay it all out at that point. When I look at it, and when you're looking at different real estate projects, you just want to add it in your exit strategy. So it's no different than if you were loaning from, a home equity line of credit, except for way better, obviously. But you just incorporate it on how you want to repay it in those early years. Now that's early years, because we talk about you want to repay the loans in the early years, but in the later years, when Darren's talking about, spending this money in retirement, we never pay those loans back. We just let the death benefit take care of that. So we don't worry about it at that point. But early years, we do want to, we want to make a plan, but the plan's completely up to us in how we're going to repay it.
Love this. This is so flippin' cool. So cool. So you know what? It's a it's very interesting. Like I said, I know a lot of people are listening to this like, oh my God, this is like a really cool idea. And again, just yet another cool strategy to take into consideration, especially some of the flexibilities and options to consider. Can I ask, is there an interest rate that is being tied to this? Like, so even if you're paying this at a later time, how's the interest rate kind of calculated in something like this?
Interest rate, depending upon which company you use, it's going to be different depending upon what the interest rates of the day are. So up till a couple of years ago, we were using 4.75 or 4.45 for 10, 15 years without changing. Some of them have jumped up to anywhere between 6.5 to 9 something. But again, for the type of loan, the unstructured tends to be short-term loans. In retirement, we usually use a different loan facility. Sometimes we can get a little bit better than that. But again, unstructured, flexible, pay it when you want. And just on that, I as a real estate investor, and I'm more of a hands-off investor. Christina is more of a hands-on investor in her recent build. She built an Airbnb recently,
Nice.
but stuff comes up. So even if you have a plan to say, okay, I'm going to pay this off over the next 3 years, and you do that for 6 months, and then stuff hits the fan. Let's say, things don't go exactly as you want. Well, you can say, well, I'm going to stop making any payments on that. I'm going to reborrow the payments I did pay back. And while I had growth while I was using it, it still continued to grow. I'm going to borrow some more money based upon the growth I had. And then, or you can pay it back for 6 months, and all of a sudden, maybe you close another deal or you sell a property and you go, oh, I'm going to pay this all off today. So you have that complete flexibility to pay that off. And then in retirement, it's almost like a line of credit you have against your assets that you can spend that money tax free. You can spend 100 grand 1 year, 80 grand the next, 200 grand the next. So you have complete flexibility on those loans. The only person you're going to get permission from is the person in the mirror. If the person in the mirror says, no problem, you can take a loan, then you can take a loan.
This is such a great strategy, guys. I'm just loving this. I'm loving the flexibility behind it. And I hope everybody just listened to that. Is even during challenging times, you still have flexibility in regards to what you can even do on the payment side, which, you see what's happening today. It's not a big surprise. It's all over the news. You see these interest rates going up through the roof, and you just need to take a little bit of a breather. And, the income's not necessarily coming into the way it once was. Again, here's just yet another opportunity to consider yet a different strategy. So, this all sounds amazing. This really does. And I don't know why any real estate investor would not put this under as part of their investment strategy to begin with, at least explore it at the very least. Maybe is there risks associated with this? Maybe you can highlight that. Just before we jumped on, obviously there's some difference of opinions on the internet as well. We gotta love the internet for what they do, but I think it's important for our listeners to actually to understand this, is maybe understand the risks if there is any. And then the second part to that question is, they're going to probably do some Google searching, what's your thoughts in regards to some of the difference of opinions on the internet when it comes to infinite banking? Some extremely positive, and some, and again, some people not necessarily for it. So maybe you can highlight the differences between the two.
Sure. Christina, why don't you take the first one, and I'll take the internet trolls.
Okay, the internet troll. Okay, so I am doing more the risk side of things. So This plan is actually, it's not for everybody. You have to be a systematic saver. You have to be saving an amount of money to be able to do it, right? So it's not for someone that might have a lot of debt or credit card debt, those types of things. Like, absolutely, you should be putting it to there first. So you have to set yourself up. It is a long-term strategy that you're depositing into this. Usually we do it, annually or monthly, but you're making a systematic deposit into this. So you have to be set up, like usually people that are real estate wealthy individuals, it's easy for them to do because they've got that savings and that savings component already. So not going to be for someone that isn't, set up to be able to be doing their savings. Now, in the first couple of years, you are underwater with your cash flow. You're not going to put 100,000 in here and have 100,000 in cash values from day one. That's not how it works. It does take, it's almost like they say it in like Nelson Nash's book. It's like planting a tree, right? You got to plant it and then it's got to grow. It's not quite as long as a tree though, by any means. It's a couple years, but with it, you're underwater. So if you had an investment that you needed $100,000 for next week and you thought you could put it into this policy and then you could pull it right back out, that's not going to happen. So like, it's not for an immediate, like I talked about, you want to start it early and build up the base so that when that investment comes up, you're ready for it, because you can't do it right instantaneously and have access to everything you've put in. So I think that would be a bit of a downside or a risk. Once you get through those first few years though, what you've got in there is what you've put and it's just growing from there. So you're fine. At any point in time, you can, now we never recommend it or nor do we have people do it, but you can cancel and take your cash values back. So like the worst thing you can possibly do is put, 100 grand in the first year, you've got 80 in there, you cancel it, you're out 20 grand. That is not ideal. We don't want anybody to do that, but it is a risk if you don't have that deposit for the next year. Once you get through that first year though, you typically have enough cash in there that you can make your deposits with it if you need to. So we've got a bit of a safety net from that side and lots of flexibility. But that would be one thing. And another big risk is working with the right person. So there's a specific product we have to use. There's a specific structure. It has to be for high cash. I run into a lot of people that did not work with an individual that knew what they were doing, and they have zero cash for 5 years, can't access it, and it was set up completely incorrectly. So there is a big risk in working with someone that doesn't know what they're doing, because it can absolutely be set up wrong.
Yeah, perfect. And I think that's almost a perfect segue with Darren, actually, because that's kind of some of the stuff that I've been reading a lot about is just working with the right people, the people who've got the experience and knowledge behind the scenes. And so maybe before I jump into Darren, ask your question about some of the opinion on the internet. So Christina, what's kind of an average timeline people should stay into their policy before they start to be able to have that accessibility? What's kind of standard?
Oh, you access it immediately. Like, I want you taking loans right away. If you've got a better investment, if you got an investment that you can do that's going to make you a nice return, then by all means take the loan and go out and do it. So it doesn't take long that way. It's more for when you hear people saying, well, you don't have access to all of it immediately. And that's something you have to be aware of, right? It's not access to all of it immediately, but you still have access to 90%. And if you can take that and go buy a building, then why not? Definitely start doing it from day one.
I love it when people say yes to giving me money. That's a great thing. Isn't that a nice treat? Isn't that, it's a little bit different than what we're used to, us real estate investors. So thanks, Christina. So Darren, maybe now I'll give you the hard question, right? It's like you read this stuff, you're like, what's going on? Why are people saying the same things? And again, it's like one's loving this, the other one's not so much. Maybe you can just highlight about what is out there and just maybe share some of the difference of opinions that are going on.
Sure. I think it's no different than if you went through the real estate community. There's people that know what they're doing, coaches and courses and stuff. And then there's just people jumping on the bandwagon because real estate was hot the last couple of years. So everyone got the real estate license and was going to sell you a property. But were they really the people that were educated on it and really going to bring you that best property, or whatever the analogy is? I find it's the same. So the people that have dealt with us and have a wonderful experience, those are the people out there that are saying, this is wonderful. But the people that go to their insurance agent who sells mutual funds and disability and group and pension and critical illness, and they go, oh, what about infinite banking? Yeah, I can do that too. And it's set up wrong. Like Christina said, you could literally, we've seen plans where there's no cash for 5 or 10 years, zero. And it's like, this is a pure insurance contract. This is not a high cash value structured project or policy. The other thing is, it's not for everybody. And there's some people in our industry that if you can fog a mirror, they think you should be using the infinite banking concept. And as Christina said, it's not for everybody. And we tell all kinds of people every week when we meet with them and go through the education session, we don't think it's a good fit for you right now
Good for you guys.
because of the other outstanding debt and the other stuff. Now, it's funny, the wealthier the people we deal with, the easier it is because they're already coming to the mindset that they're not following the herd, right? The reason they're wealthy
Sure.
is it's not because they get a 9 to 5 job and put an extra $100 a week in their RRSPs, and that's how they get at 35 they have millions of dollars. That those aren't the people that. So for the wealthy people, they've already said, okay, the traditional way of doing things is not going to get to me where I want to go. So they come in and go, you can save me tax for the rest of my life. I can access this tax free and I can spend it tax free. I'm all over that. But you get people out there buying poor policies that aren't really infinite banking, or you're really using infinite banking concept, and they lump all insurance together. And those people go, "Oh, this is terrible. I had a friend say that do this, and I had a friend do that," and we're like, "Great, maybe this isn't a fit for you."
Yeah.
But I go back to 50% of US senators do it. If you look at the US banks, the banks themselves have to disclose how much money they have in cash value. There's banks in the US that have $20 billion of cash value. There's
Wow.
Canadian banks, the five major banks that have now US branches, they have billions of dollars of cash value life insurance. The wealthy are doing it, the real estate investors, the business owners, the banks, they're all doing it. And it's if it's set up correctly, it's the ultimate savings plan. The ultimate investment plan is still investing in yourself, business, and real estate. So some people get carried away that this is the ultimate investment. It's a competitive investment. It's gross tax free. It's awesome, but you're still going to make more money investing in yourself, a business, and real estate. And that's what we kind of help clients go through. So yeah, you can go online and you can find people that love it and you can find people that hate it, but you find someone that's doing it properly with the right advisor, they're going to love
Yeah.
it.
Yeah. Good. And I think that's the key is this. And thanks for that, Darren, because I think it's true just in everything is any business owner or entrepreneur or even real estate investor, you guys we all got into this game because we wanted something different. We're looking for creative ways to increase our wealth. And so a lot of us took courses or training or whatever it is to learn strategies. And so I think the important message and the important lesson from today is continue to open your mind, look for different options, talk to lots of different people, have discussions like with Darren and Christine. And I think more importantly is ask the really good questions no matter what. And I think that's what you're referencing, Darren, is, make sure you're connecting with the right people and make sure they have that experience and knowledge before you kind of jump in, talk to other people that are part of this program as well. So
Yeah.
as
And
yeah, I think, yeah, go ahead, Darren.
no, I just add too, like, is the advisor themselves using this, right? So,
Totally.
like, when Christine and I meet with people, it's like we're business owners, we're real estate investors. This is how we use the infinite banking concept to multiply our wealth using business and real estate examples. And then you have, someone that is trying to sell you mutual funds, and as a business owner who's 30 years old, who's got a business in real estate, saying, "Oh, you should put all your money in an RRSP." And do that. And then, oh yeah, I can do this for you too. Well, is your advisor actually using the infinite banking concept in their life? And, I've got 9 of these policies now. So I'm
Wow.
a big,
Look
I'm
at
a
that.
big supporter of it.
That's awesome. Very, very good. Guys, thanks for sharing. This is just fantastic. I always like to ask our guests this is, final words of wisdom to our savvy investor listeners who I think, just because this podcast is launching, it's probably my son and my daughter only listening right now. But you know what? We'll get some growth out of that at some point in time. But maybe for them to help my kids that are listening, final words of wisdom. What's your overall you guys have been in the industry for a long time, be it in this or in real estate investing, or a hard lesson learned? What, maybe share an experience or something that can help support our community.
Yeah. Well, forget about infinite banking for a second. I've done a lot of coaching over my career. Like have coaches. I currently have coaches I go to Toronto every quarter to meet with. And without question, I tell young people and I tell older people and middle-aged people the same thing. The number one place where you're going to get the greatest return is investing in yourself. You need to make yourself better. And I deal with a lot of wealthy people, and those wealthy people have had mentors. They've taken courses on real estate. They've joined real estate communities. They have business coaches. You know, Tom Brady had multiple coaches. He had all kinds of different golfers. Tiger Woods has a coach, and you don't have a coach. Like, you know, the idea that you would try to do it on your own versus or not continue to learn and invest in yourself. And every wealthy person we know invests in themselves to make themselves better. So that's really step one. And it could be, you know, learning about the infinite banking concept or learning about Savvy Investor or multifamily. But learn something, because that investment in yourself is going to pay way greater dividends than any investment any financial advisor can ever tell you about.
Awesome. So good. So good. How about you, Christina? Anything that you want to share?
Yeah, I agree with Darren totally on that. You are your biggest investment by far. I always like to also I like to ask people too, why did the deal of a lifetime happen? Well, it happened because somebody needed money and somebody had it. So make sure that you set yourself up for those opportunities. Think ahead, right? So always think ahead, always set yourself up for success, invest in yourself, and those opportunities are going to find you. You're going to find that deal of the lifetime, right?
I love that. That's so good. Okay. So if you're looking for that deal of a lifetime, reach out to Christina as well. So just so you guys know. Guys, thank you guys so much for being part of this. So if they want to learn a little bit more about you guys, or they want to connect and they want to set up a consultation, where do they go? And just so everybody's well aware, they've got a great podcast. They've got an amazing book as well. So I'll let you kind of spread the word of where to kind of find you guys and where they can check you guys out.
Yeah, so we've got a partnership going on with you and Savvy Investors. So we want to make sure that any Savvy investor out there that's listening, you kind of get front of the line access.
Nice.
We've got so controlandcompound.com slash savvy dash investor is going to bring you to the direct access to book in with one of our wealth coaches for a complimentary education session. So it's no obligation here. It's literally just to learn more about infinite banking, how it might work for you. We're also on your website too, Michael. So I know you can find us. We're around. You can see our logos there. So encourage you to reach out if you want to learn more directly from us. And if maybe you're not ready to take that next step, definitely listen to the podcast. We've got our webinars on our website, controlandcompound.com. You've got Darren's book, Be the Bank, Infinite Banking for Real Estate Investors. They're both available on Amazon. So yeah, and then listen to our podcasts. And when you're ready to reach out, you just go on and input your name and we'll make sure that we get you booked in.
And
Love it.
follow us on the socials,
Oh, yes.
Instagram and YouTube. And what else are we on?
Yeah.
TikTok.
So at Control and Compound on Instagram and TikTok. You want to follow us there. We've always got new reels and different snippets of information that are coming out for our listeners.
Yeah, I've seen some of Darren's dancing skills on TikTok. It's pretty good,
So
actually. You
good.
guys should
Yeah.
definitely go check that out for sure. So can't thank you enough. And again, I'll put some of the details in, or we'll put some of the details in the description as well to connect. And again, you guys can just go to the Savvy Investor website as well. Just go under Trusted Partners, you'll find them there. But obviously, wonderful people, great, a wealth of knowledge. Guys, I can't thank you enough for jumping on and sharing some of your wisdom with our community. So thanks again. It's been a lot of fun.
Thank you.
Thanks for having us.
The views and advice expressed on this podcast episode are solely those of the individuals participating and do not necessarily reflect the opinions or beliefs of the podcast host, its producers, or affiliated parties. All content shared is for entertainment purposes only and should not be considered as professional, financial, legal, or investment advice. Listeners and viewers are strongly encouraged to conduct their own research and consult with qualified professionals such as financial advisors, lawyers, and accountants before making any financial decisions or investments based on the information provided in this podcast or any related content. The podcast host and producers disclaim any responsibility for any actions taken by listeners as a result of information presented in this episode. Viewer and listener discretion is advised.